Good afternoon to everybody on the call. On behalf of Investec India, would like to welcome you all to the third quarter financial results earnings call of United Breweries Limited. With us from the management, we have Mr. Berend Odink, CFO, and Mr. P.A. Punacha from Finance and Investor Relations. I'll hand over to the team now for opening remarks, post which we'll open it for Q&A. So over to you, Berend.
Thank you, Harry. Good afternoon, everybody on the call, and thank you for joining. Today we'll discuss the Q3 and year-to-date results, and as usual, I'll start with a couple of opening comments supported by a few slides, and then we'll be very happy to take any questions that you may have. So if we turn to the key results highlights, Q3 saw continued recovery in demand on the back of trade restrictions gradually being lifted, with volumes down for the quarter 15%. And as a reminder, Q1 volumes were down 77%, while Q2 volumes were minus 48%. The company posted strong underlying EBITDA margin improvement to 15.6%. This is excluding non-recurring items, versus a 15.4% margin in the prior year. This is driven by improvement in gross profit margin of 119 basis points and cost control. Q2 continued to be impacted by COVID restrictions, but in Q3 we saw further relaxations of trade restrictions and hence better recovery and good sequential volume growth. We had a robust free operating cash flow and active cash management, resulted in a net cash position of 97 crore per quarter end. And per the end of December, we've seen in various states a number of trade restrictions being lifted that were previously still in place, and we would expect this to further support demand recovery. If we move to slide 4, it summarizes the Q3 results. Net sales was down 11%, and all cost elements were down, and the reported EBITDA is 178 crore. In the quarter, we booked an exceptional income of 55 crore related to sale of leasehold land, which was no longer in use for the company. On the next slide, we show the P&L results year to date, with both EBITDA and bottom line results now turning positive, including Q3. If you move to the volume performance on slide 6, we show that per region for quarter 3 and year to date. If we start with North, volumes were down 21% in Q3, where we've seen a balanced recovery across most of the states. West posted minus 11% decline in volume, with continued recovery in all markets, with rest of Maharashtra ahead of the national average at flat volumes. In East, we reported a growth of 14% for the quarter. Here we witnessed substantial growth in West Bengal on the back of revised excise policy, leading to lower consumer prices, while all main markets in East posted growth except for Orissa. It's good to note that Orissa opened the on-premise channel in January. In South, the volume was at minus 18%. State of Karnataka posted growth, and Tamil Nadu volumes were flat. And here the attached bars in Tamil Nadu opened end of December. State of Telangana saw recovery below the average of the national. But again here, permit rooms opened end of December. And finally, in Kerala, the volumes of the quarter were ahead of the national average. And here on-premise fully opened end of December. If we move to the next sales breakdown on slide 7, we said that besides the negative Q3 volume impact, the company realized a positive price mix impact, with both positive state mix as well as price increases and a positive brand mix. In terms of EBITDA on the next slide, we show the main impact being the negative volume, which was to a significant extent offset by the higher gross margin and reduction in other expenses. EBITDA excluding non-recurring items was 2.1 crore, or a margin of 15.6%, up 16 basis points versus prior year. The Q3 non-recurring items include provisions for potential expiry of stocks and doubtful debtors to the tune of 23 crore, and included that the reported EBITDA is 178 crore. Turning to the slide on outlook and summary, The industry outlook continues to develop positively, yet remains volatile depending, amongst others, the future trajectory of the pandemic. The company continues to actively review costs and focus on working capital management and optimize capital investments to further strengthen the operational performance. And as always, we see that UBL is well positioned to navigate the current circumstances with leading market position, a strong brand portfolio, and a very healthy balance sheet. The company continues to be optimistic about the long-term growth drivers of the industry. With that, I would like to conclude the opening comments, and I'll pause here and let's open it up for questions, please.
Thank you very much. Ladies and gentlemen, we will now begin the question-answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Abneesh Roy from Edelweiss. Please go ahead.
Sir, thanks and good recovery. When I see the region-wise data which you have given, I see that the 9-month dip for Eastern region is the maximum, but for Q3 the recovery for East is also the best. So apart from the Bengal cut in duty which you have highlighted, is there an inventory refilling which has happened in Eastern region?
Yeah, Orissa also had the entire business opening up in Q3, which is the reason why the East has done better.
And this Bengal data, are you sharing to other states in Bengal after the cut? Is the state government making much better tax revenues if you add the volume impact and the cut in duty? So is the state government much better off versus earlier?
We have not made a calculation because we yet do not have industry, because we have grown, but we don't know exactly, we've not been tracking industry fully, so we really can't comment on the exact numbers, because unless there's some declaration from the revenue department of West Bengal, we really wouldn't want to comment on that.
Oh, but the cut is for all the players, right?
Yeah, but unless you have consolidated numbers, we really wouldn't want to comment on the revenues that the government has collected on this. Because there is a spirit angle also to it. So if you take revenues include both your spirits and beer.
No, my question was only on the beer industry.
Yeah, I think it's more a question of how the volumes will stabilize. Short term, we've seen, of course, a very high growth in the first 1-2 months, but I think the question for the state will be in the coming months, how will that pan out? I think the positive stance is that, they look at moderation and affordability, and that together with the volume growth in the industry, most likely will yield longer term higher excise revenues. That would be my expectation.
And sir, the last question on the Delhi proposed regulation change in terms of the registration and the brands. So do you see any benefit for you? In the spirits, we understand the larger players are happy about the proposed change, while the smaller players aren't. And for the UP market, for the bigger purchases by customer, he needs to pay license fee. Does that impact you also?
On Delhi, I think in general the proposals that we have seen are positive in the sense of supporting ease of doing business, looking at the minimum legal drinking age, looking at the number of dry days, also lesser restrictions and fees. So we'll have to see how that develops into formal policy, but I would say indeed as of now that's positive.
UP will be effective 1st April. And UP also seems positive. There's
Okay, sir. That's all for me. Thanks a lot. All the best.
Thank you.
Thank you. The next question is from the line of Aditya Soman from Goldman Sachs. Please go ahead.
Yeah, hi. Good afternoon. So my first question is on Andhra Pradesh. Any sense of any recovery there compared with where we were previous quarter, or is it status quo? And the second question is on your new launches that you've launched over the last couple of years. I mean, one would be the wheat beer. Have you launched it in any further states? And what has been the initial response in the states in which you've launched it? And same for non-alcoholic beer as well. Thank you.
Thank you. So your first question on Andhra, I think in Q3 we have seen a reduction of price levels in the beer market. As of yet, it remained a negative on our figures for Q3. So hopefully the market stabilizes and we can see a bit of recovery going forward. But in totality for Q3, trading was very low and, as I said, on balance a negative for our figures. On the new launches, we indeed have further expanded the footprint of the number of brands. Wheat beer has now also been launched in Delhi with good initial responses. We will continue in the months ahead to roll it out to additional states where we think the proposition in the wheat segment has a good opportunity. And in terms of the non-alcoholic portfolio, we continue to see healthy growth despite the turbulence of the pandemic. So it's a small base, it's a small segment versus our total alcoholic beer business. But we see steady progress, we see steady consumer traction developing. So we're happy with that progress.
Thanks. Just following up there, I mean, can you give us any sense of numbers on wheat beer, non-alcoholic beer, or even Andhra Pradesh, honestly? Because do you expect to be sort of flat year on year, given that the impact started in 4Q last year, or would you expect growth in 4Q?
On balance, I would expect growth in the full year.
Got it. Any sense on volumes on wheat beer and non-alcoholic beer?
The non-alcoholic beers, we split out separately the revenue in the results. On wheat beer, I think you have to reckon that this is quite small in the grand scheme of things of our business. But for example, where we launched a couple of quarters ago in Karnataka and Goa, based on our estimates, we have been leading the segment for the recent quarters. So that's encouraging, but you have to take into context that the wheat beer segment is a relatively small segment of the lager market.
Understand, very clear. Thanks.
Thank you. The next question is from the line of Avinash Pala from Brookfield. Please go ahead.
Sir, thank you for giving me an opportunity. I think my question pertains more generally to your portfolio of beers and especially the craft beer or wheat beer segment. Well, you've said, there are a couple of points that I've been reading. The first one is that in the US, the craft beer sales is around 15% of the overall sales of all beers. And then the second point is recently AB InBev has tied up with Indian hotels to put up capex to open breweries, right? And third, I've seen that a lot of breweries, craft breweries, are expanding to their retail, right? And we have just one product category. So is it fair is it a fair assessment on my part if I were to say, so far as craft beer is concerned, the company is a little reactive as opposed to being more proactive?
Yeah, I would look at it, I think, split the market a little bit two ways. One is where we talk really about on-trade consumption, being it microbreweries or brew pubs, which is, really local, fresh, experimenting with different flavors, really the on-site experience, if you will, non-packaged beer usually. The second element to craft, I would categorize more as, the bottled craft that is partly sold on premise, partly to the take-home channel. Here also we see in India a lot of products coming to the market. Some stay longer than others develop better than other launches. So that is, very much, I would say, under development. I think if we look at our company, we don't see ourselves that much in the kind of microbrewery sphere. Of course, in general, it's very positive. I think that the perception of beer, the experience with it, the number of consumers and occasions exposed to it continues to increase. So that's very promising. Not to say that we immediately should, invest in everything that is happening in the market. But definitely, if you look at our portfolio, yes, we have launched wheat beer, but I would imagine that over time, more and more propositions also would come to the market that reflect the developing consumer preferences also here in India.
Do we have any plans to open up, like you said, now that you said that you're not going to maybe think about opening up breweries to own the experience? Something, is that something the company is thinking about?
Of course, we always evaluate it. I don't see us in the short term having concrete plans to come to the market with that. I think it's more of an offering where there's a large share of food, wine, potentially kind of a real estate in urban areas. I think that's less of our core business today. But of course, there are different models and opportunities as to how to tap into this segment, so that it's something we continue to evaluate. Yes.
Thank you, sir. That'll be all.
Thank you. Before we take the next question, a reminder to the participants, if you wish to ask a question, please press star then 1 on your touchtone telephone. The next question is from the line of Krishnan Sabamurthy from Motilal Oswal. Please go ahead.
Thanks for taking the question. My question is regarding on-trade. How much has been the revival on a YOY basis for the quarter, and possibly if you can give it on a December exit, a month exit as well? Is it getting better and better, and if so, what's the extent of recovery?
Yeah, definitely the on-trade has played an important role in the recovery and the sequential growth that we have seen. I think in general, but this is more anecdotal, we've seen quite some footfalls, people happy to be back, happy to socialize, be it, of course, within the restrictions that are applicable from state to state. I think as time progresses, people also feel more confident of visiting the on-trade. With our estimates, the number of outlets that is open, probably a few thousands might still be closed, but the far majority has opened by now. So it's not in a full swing back, I would say, as maybe 1 year ago, but definitely encouraging trends, and that we see supporting our recovery.
But in the quarter, the opening up of on-trade has been, especially in Telangana and Kerala, has been towards the last part of December. So as such, the quarter has not fully captured the opening up of on-trade. Tamil Nadu, Telangana and Kerala open up towards the later part of December.
Yeah, but all three were open in December. Any indications as to what was the extent of recovery compared to the same period last year, maybe December last year?
Yeah, where Pranatya mentioned these states, most of them were end of December opened up. So we'll have to see the recovery. But generally, what we see, states opening up back in September, back in October, the on-trade, this has step-by-step supported recovery.
Okay. And have any of the states relaxed the 50% capacity restriction?
Sorry, I didn't get your question.
There is a capacity restriction, right? The number of seats that can be is half of what it was earlier, right? According to the government regulations in states. Has any of the states relaxed those?
No, we've not seen any new updates.
Okay. The other question is on that AB InBev reduced prices of Hoegaarden Corona in December. Any impact that you have seen on the premium segment, super premium segment as a result of that?
Oh, on the premium segment, I think that's partly coupled to the recovery that we discussed in the on-trade. We see numbers coming back to in terms of share within our portfolio to last year Q3 levels, so that's positive. But as we said earlier, there's a very healthy, consistent trend of premium growing. So the number of products, I guess, in that segment, the pricing, how it's brought to the market, I think that will continue to evolve quickly in the years to come. And this also has our full attention.
Anything to call out on material gain or loss of market share in this segment?
No, nothing that stands out as far as I've seen the numbers.
Noted. Thanks, Ben.
Yeah.
Thank you. A reminder to the participants, if you wish to ask a question, please press star, then 1 on your touchtone telephone. The next question is from the line of Ashit Desai from Emkay Global. Please go ahead.
Yeah, hi. Thanks for taking my question. I have a question on UP tax reduction on beer. I mean, this has been done after a long time. And, I mean, given the context that IMFL volumes have doubled in the state, whereas beer volumes probably have not grown at a similar pace over the last many years, how do you see this tax reduction? And if you can comment on the extent of price reduction and how attractive it is for a consumer and for the beer industry growth going ahead.
Yeah, based on the policy as we have seen them, the potential price reduction could be around 20 rupees per can, the main can. We'll have to see exactly how that pans out. I mean, we're now doing the price application, so there's a little bit of unclarity on some of the COVID says how it exactly pans into the calculation. But those technical points put aside, in general, we would expect a reduction in the market. So this is, of course, positive for the affordability, for the accessibility of the category, and we would expect that to support further volume growth in UP.
And what is the share of volumes in UP now for the industry?
You're talking about UB share?
Yeah.
Market share of UBL in the beer industry of UP, right?
No, industry volume share.
You're talking about salience of UP vis-a-vis the entire country.
Right.
It's about between 7 and 8%.
Okay. And secondly, is the procurement of glass bottles now normalized versus we had some issues in first half? Or can we see more improvement over there?
Yeah, the procurement of glass, I would say, by and large, has normalized. I mean, the huge capacity crunches of about a year and a half ago have kind of stabilized themselves. I think one watch out we have on the glass bottles is that recently we've seen the share of new bottles slightly ticking up, so a little bit higher than we normally trend at. So this is something we carefully monitor. We would expect with further on-trade opening that to stabilize and to be of a temporary nature. But in terms of the first part of your question, the pricing as such and availability is normal.
So share of new bottles was still higher in Q3, which should come down in your view.
Yeah, in Q3 we've seen it a bit higher, but it's a bit too early to say will it remain at this level, are we stabilizing from here, or will it come down as the market continues to face less restrictions and better recollections of the bottles.
Got it. One last question, if I may. Could you share the December exit volume recovery?
In December, we were at -10%.
Okay. Thanks and all the best.
Thank you. The next question is from the line of Alok Shah from Ambit Capital. Please go ahead. Mr. Alok Shah.
Hello, sir. Thanks for giving me. Thanks for giving me this opportunity. My question was more on the pricing of the competition. We pick up and as asked by the previous participant, there have been some price reductions in Garden.
But there's a lot of disturbance from your audio, so we are unable to hear you well. Could you please use the handset mode while speaking?
Sure. Is it better?
Yes, you may go ahead, sir.
Okay. So, we are picking up that there has been some price cuts by the competition. Do you see price reduction apart from the Whole Garden brand and also within the Carlsberg portfolio, or it's only the Whole Garden that you see? And my second point is that are we in some sense retaliation to that planning to take the price cuts in the upcoming refilings that you do to the state? Thank you.
Yeah, we've seen a few brands, I think, related to the way they are produced and brought to market, change some of the pricing. But in general, I don't recognize a picture where prices have been trending down. Of course, on a local level, there could always be, certain activations or promotions, but in general, I don't see that as a picture or a recent trend in the market. As to how we will look at pricing going forward, yeah, that's too early to share at this point in time. But I think we all kind of recognize that the profit pool and the excise duty, the profit pool is low and the excise duty is relatively high across the whole industry. So I would imagine room for price reduction is relatively limited.
Got it. Thank you very much.
Sure.
Thank you. A reminder to the participants, if you wish to ask a question, please press star then 1 on your touchtone telephone. The next question is from the line of Harit Kapoor from Investec Capital. Please go ahead.
Yeah, hi. So just two questions from my end. The first one was on the on the other expenses side. So over the last 2-3 quarters, you have managed these expenses quite well. Even in your presentation, you've mentioned about relooking at costs. I just wanted to understand, what proportion of the cost structure you feel in terms of the reduction could be permanent going into F22 and F23 when normalization resumes.
Yeah, within the other expenses, we have a variety of costs, if you will. Some relatively variable distribution, promotions, and some rates and taxes. Other more fixed, be it insurance, audit fees, administrative overheads, etc. Our approach has been that we look at all line items. We're not coming out with guidance as to what is the absolute or percentage margin that we seek to take out. But it is an area we've been active on in the last 9 months, and we're still in the middle of let's say a cost review and finding new opportunities, new creative ways to look at what is the right cost level and the right processes for the business, given of course also what has changed due to COVID and some of the new realities for the companies operating in the industry. So yes, we have been happy with some of the reductions so far. Some of it will come back as volumes increases, as we will continue to support the brands in a bigger way. At the same time, we'll look at other types of costs to hopefully offset that to a certain extent as well. So yeah, we're actively looking at it.
So just to follow up to that, is it suffice to say that there will be some element of overhead costs which may not come back completely once normalization resumes. However, that you can't quantify that, but would it be correct to assume that?
Yes, we definitely look at let's say coming out of the pandemic period with a leaner cost base. But of course we look also that let's say in the respect of what we spend on commercial firepower, if you will, and market share positions of the brands, etc. So in that whole context, I think we have to look at what gets retained in the bottom line margin. But your observation is correct that some of the costs we don't expect to have back post the pandemic.
Yeah. My second question was on the material cost side. You did speak about glass, but if you could give us a sense on the barley price environment, at least the market prices seem to have come off sharply. But for your consumption costs, what kind of dips have you seen, and what's the outlook there, in terms of your consumption?
Yeah, so on the raw material side, the main input cost for us is barley. There we have been buying roughly at around 10% lower prices than the prior harvest. So this is what's finding our way now in our product prices. And we'll have to see come another quarter what the outlook will be for the harvest and the pricing. So that's a bit too early this point in time to comment on.
Got it. That's it for me. I will come back for more. We can check more questions with you.
Thank you.
Thank you. The next question is from the line of Krishnan Sabamurthy from Motilal Oswal. Please go ahead.
Yeah, thanks. My question is regarding the month of December. Does the Christmas New Year consumption largely tend to be on trade, and therefore maybe 10% recovery, 10% decline may have been much lower if not for that?
No, actually, I mean, what you're saying is right, but there is enough sufficient pipeline stock for the spike consumption since most of the on-trade outlets opened up in the end of December. So as such, when we report revenues, it's on our primary dispatches. So, I mean, that has not given us a real boost, considering that there is sufficient pipeline stock in December this year.
Understood. The next question is a bookkeeping one. What will be the likely capex for FY21 and in plans for the next year?
Yeah, so for this year we continue our earlier guidance that we approach, I would say, just shy of 200 crore capital investment. There you would have to net off the exceptional gain that we booked this quarter, meaning we'll get closer to kind of 150 crore number for the current running year. For next year, I would think we have most likely a similar guidance of below 200 crore, given that we still continue to come out of the pandemic situation. But we'll come back to that in the next earnings call.
Understood. Thanks, Varun. Thanks, Manoj.
Thank you. The next question is from the line of Ashit Desai from Emkay Global. Please go ahead.
Yeah, just two follow-ups from me. One was, I missed the AP impact part. If you can highlight what has been the impact over there. And is there any change in terms of the volumes over there, or we continue to stay away from the market still?
So in AP, what I said earlier, the government has changed the excise rates back in the start of Q3. So that led to some stabilization. For us, the number of orders has been very low during the quarter. So net, the last Q3 was still a negative impact from Andhra on our figures. And we'll have to see coming quarter if that stabilizes and hopefully maybe picks up. But that's where it's at the moment.
And how much was the negative impact?
Well, as you recall, we came, one October prior year. It's one of the policy changes were implemented. So that was led to quite a reduction in orders and demand. So we did see some orders back in October, November, etc. from that year. So net, we were still below that this quarter. So as of yet, the comparables out of the base figures, if you will. So let's see what happens following that.
Okay. And why is our depreciation cost lower versus last year and even sequentially? Is there a change in that?
We are depreciating based on the shifts that the various units are operating on. Because the Companies Act prescribes that if you're operating 3 shifts, then it is full depreciation. Sorry, it is double the depreciation. If you're operating single shift, it is a single depreciation. So thereby, considering that most of our units were not operating to full capacity, they have been depreciated unit-wise based on capacity utilization.
Okay. Okay. This wasn't a policy which was followed earlier, right? Because I'm sure in lean season we were never operating 3 shifts across capacities.
Yes, but as a whole year, if we did operate above 6 to 7%, which means to say what as a whole year, if you take an average, we did above what we would term as 3-shift depreciation. So as such, to have equilibrium, we operated depreciation in a manner that it was 3-shift across all 4 quarters. Considering that this year is an unusual year and we have the pandemic around and some states recovered faster than the others, we have depreciated based on capacity utilization in each state and each unit.
Okay, and what would be your capacity utilization now? And till what level what will be the level where you'll reach a 3-shift kind of utilization?
We should end the year by 3-shift utilization. So in the coming year, you will see us depreciating the way we did previously.
Okay, got it. Thanks, that's it from me.
Thank you. The next question is from the line of Avi Mehta from Macquarie. Please go ahead.
Hi, sir. I just wanted to understand, what the earlier participants had indicated about there not being any substantial, if you could just explain in the channel. I would have expected that with recovery, the channel inventory would have also gone up. Why has that not happened, sir?
Sorry, just repeat your question.
Sir, with the recovery playing out in December, logically the channel inventory also would have started to pick up stocks. Has that played out, or is that a fair expectation that should play out going forward?
Yeah, I mean, it's a fair expectation. It's a fair expectation. But if you see if you compare our business in 2020 vis-a-vis 2019 December, the overall mark has been 9-10% lower. The large states like Tamil Nadu, Telangana, and Kerala, put together these 3 states will be about 20-25% of the salience. In these states, the consumption in on-trade opened up only towards the latter part, to the last week of December. So as such, yes, there was a good impact on consumption due to the Christmas New Year season. But however, considering that this December was far subdued compared to previous December, thereby there was sufficient channel stock to ensure this consumption could be met. And as such, we didn't have a real positive impact on our dispatches.
Okay, so the 7% decline that we saw in December is more symptomatic of the underlying demand side rather than a channel filling. That's the way I should look at this, right?
Yes.
Okay, sir. Okay. And so second bit is essentially on the glass, new bottle versus old bottle usage. What exactly do you think, not timelines, but what would be the steps in your view for the old bottle share to kind of start inching upwards? Is it still a supply chain issue? What exactly, how should I look at that? If you could kind of give your thoughts on how that share should kind of rise as we go forward.
Sure. So we have seen in other states, and that we expect the trend to be in the states where further on-trade has opened up, that the number of the operators collecting the bottles increases, so that restores back to, let's say, pre-COVID levels. And they visit the usual sites where collections take place. So there's a bigger network, there's a bigger pool of bottles being collected from more centralized points, if you will, i.e. on-trade and bigger centers of consumption, which is a different dynamic. If you can imagine that a full on-trade would have been closed, then kind of gathering those bottles, incentives for collectors to operate in certain areas is most likely less. So those are a couple of factors that we expect to play into this to stabilize the bottle returns.
Okay. And so lastly, there is a shift, which we are witnessing of people celebrating in smaller gatherings. Is that a trend that you think can sustain? And if yes, how are you looking to address that, or how would that impact? That's all from my side, sir.
Yeah, there's some super premium brands which are packaged in different sizes for this kind of consumption pattern. But whether this consumption pattern would continue going forward when on-trade resumes and when footfalls go to the levels prior to pandemic, we need to wait and see.
Okay, sir. Thank you very much, sir. Thank you for answering these questions.
Thank you. The next question is from the line of Abneesh Roy from Edelweiss. Please go ahead.
Yeah, hi sir. The one question on the surrogate advertising. So one is competitive intensity in terms of advertising. How is it versus pre-COVID? You and the other two main players. And second, because of surrogate advertising stricture by FT, is there any risk of your propensity to drive discretionary consumption?
So in general, we have seen a lot of the advertising move more online and digital, as one can imagine. I think our share of voice has been good, if not higher than usual. In terms of the legislation, yes, there are always, let's say, back and forths and clarifications to be had there. But we don't see any negative impact or potential issues where we would not be able to market the brand. So we work close with the agencies, with the regulators, and are confident that the plans that we have, we can execute them in the future.
And ad intensity is back to pre-COVID?
I would think in general that's a bit related to the market recovery, so it would still be a notch below what we might have seen similar time of 1 year ago. But definitely it's again with the recovery picking up, and this would be my expectation that continues towards, let's say, normalcy as well.
And the last question, before the COVID, generally most quarters, beer was growing faster than spirits as an industry. When do you see that coming back?
That's difficult to forecast. I think it's good to see that, the last quarter, the kind of gap that we saw earlier, much wider between beer and spirit, seems to be narrowing down quite quickly. We've always said structurally we don't see, due to the pandemic, any reasons why, once things stabilize, consumption or behavior of consumers would be in any way meaningful way different. I think the trend so far confirm, I think, that hypothesis. When it will kind of cross and then beer picks up further beyond, I'm afraid that will remain difficult to put any expectation or timeline on. But we are focused, of course, very much on the beer category, and happy with the sequential growth that we have seen and the consumers coming back.
Okay, sir. That's all from me. Thank you.
Thank you. The next question is from the line of Pritesh Chheda from Lucky Investment. Please go ahead.
Yes, sir. Thank you for the opportunity. One question. FY19 was one of the best years for us in terms of gross margins and EBITDA margin, and thereafter, we saw inflation in barley prices, and thereafter, the new bottle-related cost increases and the lower volume operating leverage which happened in FY21. So is it fair to assume that FY22, as we get into the next year, the cost structure or the dynamics are more similar to FY19 in terms of the gross margin, considering that the barley prices have come off and there is no inflation in the glass bottles?
I think that's a bit too early. I mean, we'll have to see the new barley harvest that will be coming to market in April. So what pricing will come out of that? Potentially glass bottles, etc. We'll see different dynamics at that point in time. We'll have to see what happens to excise policies, impacts on consumer prices. There will be a couple of state elections. So I guess there are quite a couple of unknowns that, as we move closer to the start of the new year, hopefully we get a better sense on the range of outcomes. So what that margin could be.
So to slightly differently, based on what statistics that we have on hand today, which is the pricing index that we would have taken, and the corresponding raw material index as on date, is it, if you just consider those two elements, is it then a fair guess to assume that the gross margin are back to what they were 2 years back?
I think the gross margin, one of course is the input cost. The other one is very much a function of state mix and the prices obtained in the various states. Of course, we have seen in Q3 a very good improvement. I think bottom line EBITDA margin is also coming back to good levels, coupled with the cost programs that we are running right now. I think that gives good confidence. But as I said, I mean, we're also having a couple of more external factors like commodity prices, excise policies, etc. Those can move things to the positive and the negative as well.
Okay. Thank you, sir.
Thank you. A reminder to the participants, if you wish to ask a question, please press star then 1 on your touchtone telephone. Well, ladies and gentlemen, that was the last question for today. I would now like to hand the conference back to Mr. Harit Kapoor for his closing comments. Over to you, sir.
Yeah, thanks, Janice. On behalf of Investec, we'd like to thank the management of United Breweries as well as all the participants on the call for giving time, for this session. Now hand over to United Breweries management for closing comments.
Thank you, Harit. Thank you, everybody, for your interest in the company today, for your questions. Any questions unanswered, please let us know after this call, and we're happy to follow up. For now, wish all a good day and look forward to speak next time. Thank you.
Thank you. On behalf